Hello everyone and welcome to Crypto Ripto. I'm Christian and in today's video we're going to do a little bit different in an educational purposes. I'm going to show you some of the key simple trading strategies and buying and selling strategies I use in crypto to make my ROI, return on investment, an absolute 80% better winner than a lot of the people in the market. Now this bit is not rocket science, but the good news is it can be done by you, me, any old Tom, Dick and Harry. The bad news is it is not get rich quick. It is get rich medium to slow. Now that is not what a lot of people want to hear. But if you want returns daily, weekly, monthly, and want to be outperforming the market on a ratio that I use 4 to 6, every 6 trades I put on I win 4, then this is going to be the video for you. But tell yourself this one thing. How many YouTubers, TikTokers, influencers, Instagrammers that Gary Baldy from the garage, who was a mechanic a year ago, is now the best crypto trader in the world. Betty Boot from Betty's Salon was painting nails a year ago. Now she's the best crypto blockchain technology woman in the world. And they'll all be on there going, yes. Invest in Bitcoin 5 years ago, boom. Invest in XRP 20 years ago, boom. And what good is that to you when you ain't got a bloody time machine? So you need to know what's happening current. How do you buy them dips, make the profits and sell them pumps? Well, if you want to learn all about that without all the bullshit, yep, nope, and all that waffle, stay tuned and let's get into the video. So before I start, I want to say that anything you see, hear or choose to ignore in this video is not financial advice. No, it's educational purposes only. And also on top of that, if you're going to start trading, always, and I'll cover this in the video, practice first and never invest what you're not able to lose comfortably. I know everyone keeps saying that, but this is what will attach you the most with your emotion to your money. Think of it as if you was happy to pay on a meal for family and not worry about it, then you can trade it. Because for me, that is what you're comfortable to lose. So let me jump straight into a nice little presentation of all the key factors that you need to know about starting up in your simple trading strategy. So as you can see here, I've done this little presentation and just highlighted 8 of the key factors that I think are a must when you're starting up trading. And I've just simply named it Simple Trading Strategy to Outperform 80% of New Traders. Because this to me is what I wish I'd have done in the first instance 10 years ago, but I have been using this for years and it does me proud. So number 1 is set up a trading plan. Now I'll show you the trading plan that I think is good on buying the dip and selling the pump in this video after this presentation. But it is key important that your first thing that you do is set up a trading plan. Also, you need to train your emotions and treat trading like a business. Now, this is super key because if you're trading with emotion, you're not going to sell when you should and you're not going to buy when you should. You're going to get too attached to the money in the market. You're going to be trading through fear. You're going to be trading through panic. And you're going to get to the borderline where you are not trading anymore. You've become a gambler and an emotional wreck. Number 3 is use technology and the news. This is important, as if you see my video on Solana with the manipulation and the scam yesterday, you would see how the news brought something out and on the same day the market had its first trace back in Solana. Technology is, there's plenty of free trading tools out there and it is super important that you use them. There's some in the key takeaways. Obviously your technical analysis charts, your indicators, and also when I say technology, use the internet to your advantage to train and educate yourself. Also, what I just said a minute ago, only trade what you can afford to lose. Now this sounds super simple and in hindsight, it's as easy as making a cup of tea, but boy is this the difficult one. Setting yourself daily, weekly, monthly limits is the hardest thing to do because when you experience your first loss, you start to need to chase that loss. You go into a gambler's mindset and that is what you have to trade yourself not to do. And you do this by practice trading first using something called trades. Now, in the key takeaways, it does say use TradingView free charts, and that does have a paper practice trade function on there. Number 5, study the markets. Now, don't try when you're first starting out to listen to everyone going, no, on all these coins, tokens and everything. Set your portfolio aside for tokens you want to invest in, but if you want to do a bit of weekly or day trading, you need to just set the markets you are happy with. Pick 1, 2, 3 or even 4 coins if you're comfortable with that, and study them and the patterns and the emotions in them charts, and you will be able to control it, manage it, and be a lot more successful. This one, please ingrain this into your head. Always use a stop loss and take profit. Show you quickly in the video about how I do it on Bitcoin, and this is a key factor. You need price targets for when you're going to buy the token and coin, and you need price targets when you're going to sell the token and coin. And it's always absolutely imperative, especially if you're day trading, to use stop. Also, the next one, number 7, when you are trading, never chase a loss. If you lose, you expect to lose. Like we said, we work on a 4-to-6 ratio, so you expect to lose trades, okay? And never ever think I've lost it, so I have to double it or start using leverage or start, you know, making silly risks that are outweighing the rewards to try and chase that loss, because then you've done what we said not to do, is turned into a gambler and not a trader. Number 8, and it's the last one just for this, but obviously there's a lot more to trading, but keeping it simple, is keep a trading perspective. Losing should be as easy as winning. So this is how you have to get your perspective mindset set and absolutely drill it into you, that it is a business. I'm not gambling my wages or anything like that. I'm trading to have a better life for myself, and I can win at this if I stick to this rule. So just think, this perspective is that losing is easy because I'm expecting to lose the 2 in 4. Even if you're losing more than that, we will get onto that in the video, it's time to stop trading for a couple of days and get yourself in a mindset and start trading again. But keep your trading perspective that losing should be women, because you're expecting it in your trading plan that you set up in number. So obviously there's some key takeaways from this before I jump straight into the chart and show you how I do it in real life matter, is that you need the trading charts. TradingView, what I'm going to use, is free. You've got to learn, I set up here, but you've got to learn as much as the technical analysis as you can, because technical analysis is going to be your friend. The trend is your friend as they speak. You're going to tie this into factors of the market conditions, the news, and technical analysis is going to see how you buy and sell these dips and pumps. Start with paper trades, not live trades, like I said, till you get comfortable with it and you're turning yourself into an emotionless trading genius. Join a trading group if you can. There's a lot of people with a lot of good ideas that are not just influencers trying to tell you what you want to hear to get the clicks and the views. And research and learn as much as you can. You may think you've not got time, but everyone's got time for 50 minutes learning a day. Even if it's reading a book while you're on the old crapper house, whatever it is, learn it and stick to it. And remember, we are traders, not gamblers. So don't take them silly risks and listen to all the people giving you stupid advice. Like I said, Gary Boldy from my garage, it was a year ago. You've got every man and his dog now thinking they're crypto experts. I see so much of it. So remember, don't just gamble on what they say. Stick to what you know and trade smart and don't get wrecked. So the conclusion to all of this is understanding the importance of each of these trading rules, which are set at the top, and how they work together. This can help your trading establish a viable trading business, and that's what you want to be. You want to be a viable trader, not an erratic gambler. Trading, as you all know, is hard work and probably a lot harder than you think, but it is achievable. But if you put that practice in, you have the patience, the discipline, and you follow your plan, your guidance, you can increase the odds for you to be a very comprehensive, successful trader in your area. And I'm going to jump into the charts now because obviously that's a lot of information to take in. If you want this little chart that I've done, leave a comment below and I'll reach out to me on cryptoripto.com and send me an email and I'll send it over to you, and you can keep this and have a look at it and start putting it into practice and learning. But for me, it is important that if you want to be successful in crypto, you have to have this plan, follow these guidelines, and you will see how I do it and how I become so successful. Last year, and I can show you this, my ROI on this trading kind of weekly platform was 37%. Yes, it's not the 100x's or anything like that daily and weekly, but 37% like week on week is absolutely phenomenal. And I had a big loss at the beginning, but my overall yearly on investments, not trading, was I just under 6x my money. So what I put in at the beginning of the year up until now, and I'm talking at this moment now where the market is in a retracement, is at 6x, which for me is more than enough. And I've been layering in, buying my 25% of what I keep saying, keep 25% in your portfolio in this dip, ready for this to do another, hopefully in a blow off top if we have it, another 4x. So with all that being said, I'm sure you're keen as shite or mustard to get straight into the chart, and let me show you how I do this perspective, buying on the crash and the dip and selling on the way up, on the pump and the euphoria, to absolutely utilize the fear and greed in the market. Boom. So I'm going to start with Bitcoin chart and quickly show you Solana's chart as well, and then you can choose whatever charts you like. But as you can see here, Bitcoin had this crash where everyone was in the market was panicking, thought crypto was over. You've got the YouTubers and the yes knowers telling you I told you so, that's why I shorted it, you know, bear markets here, blah blah blah. But if you're a trader, you don't care. You need volatility in the market. You need crashes as much as you need these pumps. And here's why. Because if you've set your chart up correctly and you've got your trading channel like me, and you've got your key support areas here of support at 40k neutral, D-line at 30k where the last bit of crash was back in the middle of last year, and your resistance here, you can see that even on the 4-hour candle, Bitcoin traded in this channel very nicely, bounced off this support and then had a crash. And that was a crash, because obviously you know how I see crashes and what percentages. This is where we think, okay, we need to look at how we're going to buy this crash. Now for me, I like to wait till the crash is done, where all these red candles, all the blood is in the streets, absolutely settles down, and we start seeing signs of it slowing and the market going up a little bit. Now this is not necessarily going to be the bottom, but it is going to be a good indicator for you to start dollar cost averaging in. Now, as we know, we can't always get the bottom of the market. We're not magicians, we're not time machines as some of the TikTokers think we need to be with all these price charts. But if you have a look at this line here, where it took a bounce, had a little bit of relief, and then it dumped more. And if you're looking at this, you see this is a good indicator that this is the bottom. This is where the bottom of Bitcoin's going to be in, and this was just under 35k. So you can think now's a good time to start dollar cost averaging buying. I'm going to buy a bit there. I'm going to wait till it goes up, maybe look for the next kind of support level, which would be here, and I'm going to buy a bit there, which is key. And you can see obviously it's hit, slowed up a little bit, and then obviously it took a rally. So for me, you're thinking, okay, I brought a bit there, it took a little bit up, and then you had a big bit of a dip, and you probably brought that dip as well, and then that's you buying into the crash. Now what happened then is Bitcoin went sideways, and it's getting rejected at the bottom of this support line here. Now this is key, and this is why I'm saying you have to set your charts up like this, and this is what I did. Dude, if Bitcoin gets rejected at that, that's my time to buy. Bitcoin goes back up, I'm waiting to see if it gets rejected again. It didn't. Now I know it's going into what, for me, back into the trading channel, and there's more likely to be an uptrend. So then as it goes anything above here, you can probably sell a bit. So if you're trying to edge the market, you would look at probably selling a bit there. You'll wait till it comes back down to this resistance, and this is your new kind of bottom now. You want to buy a bit more, but if you're happy with all what you got, then you can wait and think, okay, it'll get to this bit, I'll sell a little bit back, I'll dollar cost average in, because this is going to be over a daily period. You're probably just selling bits back every like day, or you can even do it however you want, whatever your risk is. But for me, I was selling a bit back up right until it got to this support neutral line, because I knew this was a good resistance for me. So I was waiting to see if Bitcoin rejected from it. It didn't. It smashed through it and turned that into good support. So that to me knew that this was a good area, and it turned this resistance into support. And this was very much at the top of the trading channel here. So it broke through not one resistance, but two resistance, and went a bit further up. So this is where I thought, this is where all the stuff that I've brought down here, I'm going to sell probably out here. Not getting rid of Bitcoin I want to keep, that I've brought ages ago, that's super cheap, but just by buying the absolute crash and the dip. Because the reason is, I genuinely believe that Bitcoin's going to have a bit more of a retrace, and even if it comes back down to this level or this level, you can buy more then, because you're selling at resistance and buying at support. And that's the simplest way to do it. Now you can take a picture of this chart, you can set your chart up, but this is the 4 hour, and I've had these lines in here for many weeks. And if we just, and if you say, well, how did you get this line here and know it was going to hit perfectly, and how did you get this line here? Because if you want to be a bit more cautious with your trend lines and your support, always zoom out and go to the daily, and you can see on the daily that these areas here are all the way down from this price chart action here. So this support of the 40k neutral is from all this kind of price action from the big dip down here, and you can see it played out nicely here. And even on the big crash, when that big crash happened there the first time, you can see it bounce back from there. And these levels here of this kind of area here, and but mainly all this price chart action here, you can see this was the support, all of this, and the support here, this is exactly where it got rejected. So can you imagine, obviously you've not got a time machine, but you're absolutely front running where you think it's going to get rejected. So you would then put your sell box in, or your buy box, because you think obviously that's going to be the resistance. So you, however conservative you want to be and however big you want your box to be, you could put that in there to say that could be my sell zone. And this is what you do then. So when you know that Bitcoin's hit these areas, you're going to, now it doesn't matter if it takes a little while to go up there, because you know and you believe that the market's still in a bull market, that it's going to get there eventually. And it's the same for when you want to hit your buy zones. You can see that when we got into all this price chart action down here, it was the same as all this price chart action here. So you know that this then was going to be a hit for the support and here. So you could set your buy box in under this conservative bit here. So you're buying in there and you're selling in here. And also if you're doing it on the way up, you're probably selling around about here as well. And now watch what happens when we go back to the 4 hour market, where these buy and sell boxes land. Now, bear in mind, I've only just done this, but look at where it is. All this price chart action here would have been your lovely buy zone. Now, obviously it's not the bottom, but you would have got it damn cheap. And obviously you've seen that there's a release and it went all the way back up there, but you're still buying it in your buy box zone, which is still pretty much where the support was here, because that's how the markets play out. And then when it's just bouncing and using your top of your buy box as support and our trading line, and then breaks out, it goes back into your sell area. Absolutely perfect. Now, bearing in mind, we did this charting on the daily, and this was conservative on the daily, but when you look into the 4 hour chart, which you're going to be selling at, look how nicely it sets itself up for you. You're selling here where it's absolutely crabbed and bottomed out and consolidated. So your first area of your sell, when you're dollar cost averaging out on your selling, would be here, and your second bit would be, remember we did this on the daily as well, and you would have hit two key areas and maximized your profit. And this to me would have been probably around about, say conservatively, we brought here, we sold here, so the first thing would have been a 13.6%, which is great. I mean, if I'm trading with $10,000 and I'm doing 13.6%, I'm doing over $1,000. Then I'm selling up on the next leg, at 26.27%. Now, you bear in mind, you're just doing nearly a 30% ROI in the small amount of time in a market that going, nope, yeah, it's a bear market. You're meant to be running for your life here. You're meant to be absolutely bleeding out, blood in streets and doing crypto's dead. But you're just pulling 13s and 20s and 30% by being cautious, by being slow, by trading small little support and resistances and buy areas. You're not doing anything super technical. You're not pretending to be Warren Buffett. You're not pretending to be Wally or Wall Street. You're literally just doing this simple trading pattern that we talked about, these simple rules, and you're pulling out 13, 14%, 26, 30%. There's not many people in a bleeding out market that are pulling out that kind of percentage. And I've just showed it you firsthand here. I'm not guessing, I'm not saying I did this so I'm the best trader in the world. I've just told you if you want a simple, get rich slow trading strategy, that is how you do it. You look at the news and look at the information and you look at the charts and the emotion and you just front run them. And even if you brought down here and you missed this and you missed this, Bitcoin's inevitably, in my opinion, going up. So what's the worst that could happen? You're left with a load of cheap Bitcoin. So for me, it was a no-brainer. And this is why I wanted to give you this information free. Everyone's out there selling shite groups and Patrons and all this waffle and crap, when really, if you actually look at what we do, how we do it as professional traders, how we do it as market analysis and stuff like that, it's not, simple stuff is not rocket science. The super hard stuff that I do is my leverage trading and my day trading to time the market with the pips. I have to then time it. I sometimes can't wait. Do you know what I mean? 4, 5, 6 days. Sometimes if I'm day trading, I have to look at macro time scales in order to do it. But we're not telling you to do this. We're telling you to outperform 80% of the traders. We're telling you to outperform the market. And this is exactly how you do it. Now, I want to quickly, I know this video is going on a little bit, it's the Solana chart. Now, as you would have seen yesterday, seen on the third downside candle on the daily time frame. If we go to the daily here, you'll see on the third, which was around about here, this was the negative news giving you FOMO that Solana is going to shoot to 50. And what happened? It just literally played to supports. Now let's have a look at Solana quick. You wanted to trade on Bitcoin and Solana because you need to do about 4 charts and coins and tokens to get your daily, to spread your risk and get your kind of ROIs back. So if you have a look here, this was our buy box because we had all this consolidation here. We knew this was pretty much the bottom, so we started dollar cost averaging in. Even if it shot down here, we could have just brought more, but it didn't. So we used this as our buy area. Now, where did we get these lines from? So let's have a look all the way back at Solana's. Now, this was on the absolute pump of a time frame on the daily market. But if we have a look at the 4 hour, because the daily wasn't really showing us a lot, and we go back to this area here, it's one of the only few areas we had a retracement. So you can see here where our line is where we have this price chart action here, retracement. So you see here, so this is why I've got that line here, and this was a resistance for this price chart action here. So, and this is where it played out nicely. So this was a big area for a big buy box for me to get in. So when this went back down, it went back up. You would have been accumulating so much Solana here, cheap as chips, $80 for Solana, that an all-time high was over around about, I think, up there with $260. So what happened with Solana with this? Did it go to the $50? Everyone said, nope. It came up, it smashed through support, come down to retrace, turn that back into support, and you're thinking, great, these are my new selling areas. So maybe I want to sell a bit at this area here. It goes up, you can sell a bit more here. You have this massive retracement, the support. Remember, if you want to buy a bit more, always buy at support. So you would have, this would have been a massive area here, support, and then you could have sold up here. You would have seen this would have been a consolidation. Never buy at a consolidation period that is busting resistance, because for me, this could have got rejected, come back down, which it is. So you would have been buying all of it back here, and you would have been at square one here, because obviously it got rejected, resistance line to the absolute perfect. Now this is no coincidence, look, because where is it? Is this me being, you know, a mind reader, crystal ball? No, is it Bob? This is me just knowing the market is telling me here and here and here that this downtrend is a resistance line. And this is what the smart traders do. They outperform their retail money, because the retail just FOMO in, and they don't look at the charts, and they believe everything they said, that they hear in the news, that this was going down to 50, and then the smart money start buying it all up and taking it off the weak hands. And then now you can see it moving average as a kind of support area, but come back down to this consolidation period. So that is me telling you this trading stuff in an absolute nutshell. I know it's gone on a little bit longer than I like to, but it was just me showing you about this simple strategy. Now, for me, this is gold. If I had someone telling me this on day one before I got into trading, I would have been absolutely overwhelmed and had my mind blown, because for me, this was an absolute must if you're taking such low risk as this, and by buying small bits down near the crash and the kind of support levels, and selling the small bits on the way up in the pumps and at the resistance, to me, you cannot go wrong. And even if you're a long-term investor and you're just buying at support and holding, if the market turns away in your favor, you're just still holding a little bit, because you're not buying in these high areas. You're buying after a big crash when there's fear in the market. Look at the fear and greed index that I've got on cryptoripto.com, or have a look at it on Google, what I keep showing in the thing. When everyone's telling you crypto's dead, when, you know, Gary Boldy, the mechanic, that crypto's dead, when Betty Boot from the beauty salon, who's an expert blockchainist now, is telling you that crypto's dead, that's when you need to be buying it. And then when they're euphoric and Gary Boldy and Betty Boop are telling you that Solana and Bitcoin are going to new all-time highs, that's when you sell it back to them. And let me tell you, you'll be outperforming them before you know it. So I hope you found this trading information useful. The reason I wanted to bring it to you now is because I don't want people getting scammed or FOMOing into the market, because you've got to get your emotions under control.